Could something unexpected be hiding inside your pension statement? Could May 2025 be the month that flips everything UK pensioners thought they knew about their retirement income? Today's news has sent shockwaves through the senior community, with whispers of not one, not two, but 6 major pension shakeups that could touch the lives of millions. But the real question is, how many of these changes will directly land on your doorstep? David here, and I must warn you, what you're about to discover is not being shouted from the rooftops by the big media channels, yet these changes could quietly rewrite your pension forecast, your monthly income, and even your eligibility for certain benefits. But how will it all unfold? What hidden clauses are buried in the fine print of these adjustments? And is your pension on the safe side, or could you be one of those unknowingly facing the most disruptive update in years? Before you rush to conclusions or panic, I invite you to stay with me, because what's been announced comes with layers of conditions, exceptions, and deadlines that most pensioners haven't even heard of yet. And the worst part? Many of these details are cloaked behind complicated policy jargon that could easily leave thousands confused or even misinformed. But what if I told you that by staying tuned today, you'll be able to spot the key signs that these changes might apply to you, your family, or someone you care about? What hidden rules are being rolled out under the radar? And why are experts saying May 2025 could become a month of both relief and regret for UK pensioners? I'll break down each of these 6 game-changing updates step by step, but not all at once. Because each one has its own twist, its own catch, and its own group of pensioners who could either benefit or lose out. Could it be that those who ignore these updates today could wake up to an unexpected shortfall in the future? Could simple mistakes now cost hundreds of pounds a month down the line? And while some of these changes might come as good news for certain groups, others might feel blindsided. But which camp are you in? That's exactly what we'll be diving into, piece by piece, in today's detailed breakdown. So stay right here, make sure to click that subscribe button, and let's uncover together the truth behind these 6 silent updates that are about to make waves in May 2025. Could your pension be at the center of this financial storm, or will you discover you're among the few who stand to gain? Let's get into it now, because what I'm about to reveal could be the most important pension update you'll hear this year, and you deserve to know the facts before it's too late. The UK state pension system is about to undergo some of the most significant changes in recent years, and it's important that every pensioner and soon-to-be pensioner understands what this means for their financial future. As of May 2025, 6 major changes will affect millions across the UK, some positively and some potentially requiring action from you. This detailed discussion will help you understand these changes, how they might affect your pension, and what steps you should take to protect or enhance your retirement income. One of the cornerstone changes is the annual increase in the state pension amount, which is set to rise by 4.1% in line with the government's triple lock guarantee. The triple lock ensures your pension rises each year by whichever is highest among average earnings growth, inflation, or a fixed minimum of 2.5%. For many pensioners, this increase will provide a welcome boost to help with the rising cost of living, especially considering inflation pressures on everyday expenses such as food, fuel, and housing. The full new state pension will increase from £221.20 per week to approximately £230.25, giving pensioners an additional £9 per week, or around £470 annually. Those receiving the old basic state pension will also see an increase from £169.50 to about £176.45 weekly. But how does this impact your day-to-day finances? For many seniors relying primarily on their state pension, even a small increase can ease financial pressures, making it easier to cover essential bills, medication, and perhaps some leisure activities that improve quality of life. However, it's crucial to ensure you are actually receiving the full amount you are entitled to. A surprising number of pensioners may be underpaid because of errors in their national insurance records or misunderstandings about their entitlements. One common issue arises from missing national insurance contributions due to periods of caregiving or other life events. For example, Home Responsibilities Protection (HRP) credits were introduced to protect those who stayed home to care for children or elderly family members, preventing them from losing pension entitlement. However, many people don't realize that not all their caregiving years have been correctly credited on their NI records. These missing credits could mean you receive less pension than you deserve. That's why it's vital to check your national insurance record carefully and request corrections if needed. In fact, the government provides online tools that allow you to view your state pension forecast and NI record. By logging into the official government website, you can see a detailed breakdown of your contributions and identify any gaps. This could be a turning point in boosting your pension, especially if you have missed payments that can still be made up voluntarily. This leads to the second major change. The deadline for making voluntary national insurance contributions is fast approaching. Pensioners and workers with gaps in their NI records have until April 5, 2025, to pay voluntary contributions dating back as far as 2006. Making up these gaps can increase your pension amount significantly, in some cases by hundreds of pounds per year. If you miss this deadline, you can only top up contributions from the last 6 years, meaning older gaps will no longer be payable. Understanding whether you have gaps and how to fill them can make a huge difference to your retirement income. For instance, someone who took time out of the workforce to raise children or care for a family member but didn't receive the right credits might find that topping up these missing years increases their state pension by a few £100s annually. That extra income could help cover rising utility bills or contribute to health-related expenses. Another crucial factor to consider is how the rising state pension age will impact when you can start claiming benefits. The current state pension age stands at 66, but it is due to increase to 67 between 2026 and 2028 and then further to 68 between 2044 and 2046. This gradual rise reflects longer life expectancies and the government's need to keep the pension system sustainable. However, for those nearing retirement, it means you might have to work or find alternative income sources for longer than expected. If you're planning your retirement, keeping an eye on these changes is vital to avoid surprises. Many people are unaware of the exact date they become eligible to claim their pension, and the government has made tools available to check your state pension age. Knowing this information early allows you to plan better, whether that's adjusting your savings, considering phased retirement options, or seeking financial advice. The fourth major change concerns pension credit, a benefit designed to support pensioners on low incomes. Pension credit helps top up your weekly income and also unlocks access to other benefits like help with housing costs and council tax. From May 2025, pension credit rates will increase by the same 4.1%, which means more support for those struggling financially. The single weekly rate rises from £218.15 to £227.10, while the couple rate moves from £332.95 to £346.60. If you think you might be eligible for pension credit but have never applied, this is the perfect time to look into it. Many pensioners miss out simply because they don't know about the benefit or assume they wouldn't qualify. However, pension credit has relatively flexible income thresholds, and applying could significantly boost your weekly income. It's also important to note that once you start receiving pension credit, you may become eligible for additional help such as free TV licenses, help with heating bills, or discounted public transport. Alongside pension credit, attendance allowance is another benefit seeing a rise. Attendance allowance helps pensioners who need extra care due to disability or health conditions. The benefit has two rates depending on the level of care needed, a lower rate and a higher rate. From May 2025, these rates will increase to £73.90 and £110.40 per week, respectively. If you or a loved one requires assistance with daily activities such as dressing, bathing, or preparing meals, attendance allowance could help cover the costs of care services or equipment. Applying for attendance allowance requires a medical assessment and proof that you need help regularly. It's not means tested, so even if you have savings or other income, you may still qualify. This makes it an essential lifeline for many seniors who need additional support but may not be aware of the assistance available. Beyond the increases in amounts and eligibility, there are also changes in how and when payments are made. Due to bank holidays and administrative scheduling, pension payments can sometimes arrive earlier than usual. For example, payments scheduled on a bank holiday in May 2025 will be advanced to the previous working day. Being aware of these payment dates is important for budgeting and ensuring your bills are paid on time. In addition to these big changes, pensioners should also be aware of evolving rules around the triple lock guarantee. While currently protected, there have been political discussions about whether to maintain this guarantee indefinitely, especially in light of economic pressures. Staying informed about potential future policy shifts can help you plan more effectively. In conclusion, the 6 major changes to the UK state pension in May 2025 offer both opportunities and challenges. A rise in pension amounts and benefits can bring welcome financial relief, but new deadlines and changing eligibility require action and awareness. Whether it's checking your national insurance record, applying for pension credit, or planning your retirement age, staying informed and proactive is key. Remember, this is your money and your future. Taking the time now to understand these changes, review your situation, and seek advice if needed will pay dividends for your peace of mind and financial security. If you found this information useful, please like this video, share it with friends and family who may benefit, and subscribe to my channel for more updates on UK benefits and pensions. This is David, helping you navigate the pension landscape with confidence.